China has just channeled a whopping $725 billion, 0 cents worth of global trade via the yuan, even as US economic output slipped into negative territory. For all of us watching the big leagues, governments, financial markets, and daily folks, the implications are profound. First, let's unpack the two sides of the coin. On one hand, the surge in yuan-denominated trade isn't accidental. China has been pushing hard to make its currency a serious contender in global finance. Back in March, yuan usage in cross-border trade hit that $725 billion 0 cents mark, accounting for more than half of all China's international transactions that month. That's not just a peck at the dollar, it's a clawing at its crown. Beijing isn't waiting for permission, it's building infrastructure around this ambition. Its cross-border interbank payment system, CIPS, now links over 1,400 global institutions in 119 countries, processing trillions in yuan annually. A growing number of state-backed companies and banks are being told to prioritize yuan payments on major deals. Shanghai is positioning itself as the gateway for this financial revolution, buddying up with regional markets, supporting yuan-based credit, and even exploring blockchain tech for settlement systems. Meanwhile, the US economy stumbled during the first quarter, January through March, contracting by 0.5%, the first such decline in 3 years. What caused the fall? The story is in the details. US businesses rushed to stock up on imports, trying to beat new tariffs. That one-time import burst dragged GDP down by nearly 4.7 points. Even consumer spending was impacted, slowing sharply from 4% growth to just 0.5% quarter over quarter. Now, you might be thinking, isn't that just a temporary blip? That seems to be the prevailing view. Forecasts are betting on a rebound of around 3% GDP growth in Q2, assuming imports stabilize. But don't overlook the smoke signals. The job market is softening, consumer confidence is down, and the trade deficit hit a 5-month high in May, driven by a 4% drop in exports. So here we stand. China is steadily establishing an alternative to the dollar, while the US is walking a tightrope between short-term tariff tactics and long-term economic health. For you, watching at home or managing money, what does it all mean? Well, if you're thinking globally, the trend suggests we're inching toward a more multipolar monetary world. The dollar's dominance remains, but cracks are forming. Corporations, especially those entrenched in Chinese trade, will increasingly demand yuan-cleared strategies, hedging, credit, financial planning, all viewed through a new prism. And if you're focused on life at home, be wise. The quiet slowdown, labor data, confidence metrics, trade ripples, is no headline crash, but it's warning us to pay attention. If you're investing, track not just interest rate decisions, but also tariff policies. If you're a consumer, be aware that inflation may ebb, but job prospects could tighten a bit. And if you're a student of global shifts, ask yourself, are we looking at the start of a new financial era? Of course, Q2 projections look sunnier, but caution is warranted. The Fed isn't rushing in. We've already seen whispers of possible rate cuts this fall. That said, they're hesitant. Underlying inflation and labor softness complicate the calculus. Bottom line, this isn't about a one-off video clip or a data snapshot. We're watching tectonic plates of global finance shift. The yuan is no longer just a local currency, it's stepping onto the world stage. And the US economy, temporarily hiccuping from tariff-induced import storms, is fighting to regain speed. It's a drama unfolding in real time, with implications not just for markets, but for every paycheck and savings plan. Want a deep dive into how this could impact your portfolio, or ideas on navigating currency shifts? Stay tuned and consider subscribing if you're digging this kind of global context. Our content's crafted to bring clarity amid complexity because understanding these trends isn't just smart, it's essential. Let me know what you think in the comments. Are you seeing these shifts elsewhere? Curious how your business or daily life is being touched? Drop a line and let's break it down together.